Here we have the current stock market update for AMC Entertainment Holdings Incorporated, stock ticker AMC. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons so that other traders will be able to find this information more easily on the platform. So as we can see here, we have the hourly price chart, and we can see a couple of instances where we might have had false breakouts to the top side. So we've got some important price levels here. In this video, I will be going through each of these price levels to explain why they're important. And hopefully this will allow us to develop some profitable trading strategies for this stock going forward. So as we can see here, the share price itself is currently trading just above the $5 mark. Of course, this is a very critical psychological level. We've been sort of hovering right around the $5 mark for quite some time now. This type of trading activity to the sideways direction has really been in place since the 8th of August. So we're getting on 3 weeks here of really sideways price movement here. Overall, we're seeing the exponential moving averages that are sort of flatlining at the moment. And then the share prices themselves are sort of just snaking around this exponential moving average cluster. So when you start to see flat lines like this, all of this price action tends to have less and less importance because it really doesn't take much upward price movement in order to break through the exponential moving averages. So if we did see a price break to the top side or even to the downside, it really doesn't have as much significance because very small price movements are required in order to break through those levels. So as things currently stand, the main price level that I would be watching here comes in at roughly $5.20. If we do look at the recent price action here, we can see that share prices did actually break above this level, reaching $5.25 on August 26th. But the reason I'm pointing to this level here is because to me, this is starting to look like a false breakout to the top side. We didn't see an hourly close above this area. So what that means is that we also didn't see a daily close or a weekly close above this area either. What we really see here is a green candle, which is bullish, but there's a very long wick on this candle. So essentially what this tells us is that share prices were not able to maintain these highs. If a candle is green, it means that the closing price for that hourly period was higher than the opening price. So that does give us the green candle body here. But when you look at the wick of the candle, what this shows us is the ultimate price high for that trading period. So when you see a major spike in this direction like this, what this really means is that the stock was not able to maintain its price highs for very long. So we did enter above this $5.20 zone, but it was not really a sustainable movement. Share prices did fall back below there quite quickly. So for these reasons, you can start to think of this as a false breakout to the downside. A false breakout to the top side. That belief that it's a false breakout would be invalidated if we do start to see share prices move in the upward direction here. If we do see share prices break above this $5.20 level and see an hourly close above that area, then this belief that this false breakout theory would then be invalidated. But as things currently stand, we're not seeing that, and we are starting to see share prices move back sort of into the exponential moving average cluster here. We're sort of possibly finding some support here, but we would really need to see a break here in order to kind of stop this belief that what we just saw was a false breakout. So if we look in the indicator reading here, there are also some indications which suggest that this actually was a false breakout to the top side. So the reason that I say this is because if we go back to these $5.75 highs that I've spoken about in prior videos, that level is critically important because 575 currently marks a triple top resistance zone. So that is really going to be the key line in the sand for the stock going forward. We're obviously not there yet at the current moment. And what we have seen here since the share price entered into that area and formed that triple top structure, what we have seen here is a descending trend line on the relative strength index. So what this tells us is that overall negative momentum is currently governing the stock rather than positive momentum. On a shorter term basis, we do have some evidence that some upside momentum is trying to develop here. As we can see here at the bottom of this price chart, the purple line here is the relative strength index. The yellow line is the exponential moving average of the relative strength index. So as we can see here on a shorter term basis, we are starting to see some evidence that there is positive momentum, but this is a bit concerning here if we look at this area here, because what we could be seeing here is another false breakout in the indicator reading itself. And as we can see here, this matches up perfectly with the prior spike high at $5.25. So what we're seeing here is two different pieces of evidence, which are sort of suggesting the same thing. And the reason that I would even say that the indicator reading is more important here, hard to believe that the indicator would be more important than the share price. But as far as projecting prices and predicting future stock price movements, the indicator reading tends to be more important than the share price itself. So what we're seeing here, as this price movement into the $5.25 zone started to develop, we also saw a false breakout in the relative strength index reading. And the reason that I would definitely say that this is a false breakout comes from the fact that we saw significantly lower lows in the relative strength index, and the relative strength index itself also moved below its own exponential moving average, as we can see here. So this is essentially a cross between the purple line and the yellow line here. We can see that this is a movement to the downside. So this is a much more confirmed break. Whereas the movement in the share price action was not really a confirmed break in either way. We could still see both types of outlooks start to develop here. If we do see a break of these prior lows, which came in right around $4.90, then this would suggest that this is a false breakout in share prices. However, if we see a break above $5.20, that would suggest that this theory is incorrect. So as things currently stand, there are some interesting developments that have also happened in GameStop as well. That stock is in much more trouble at the moment. I do suggest that people take a look at that video. I just posted it. People should remain aware of both of these stocks, because in many cases these stocks do trade in sympathy with one another. I do understand that these are completely different situations. And you could see a rally in AMC and not in GameStop. But what happens in one stock tends to also happen in the other stock, and that stock is really collapsing at the moment. So I do suggest that people take a look at that video as well. So here's the current market update for AMC Entertainment Holdings Incorporated, stock ticker AMC. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.